Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is March 21st, 2022, and this is an impromptu live stream. Alright, just felt like going live, so we're going live. Alright, just one sec, I'm going to check and make sure everything is fine. Let's see. Here we go. Okay, looks like we're live. And cool. I like it. Okay, so I want to talk about obviously what the price action's doing on the short, medium time frame, short term, on the short and medium term time frames. Yeah. So I'm on the 15-minute time frame, and the title of this live stream is Bitcoin Dump Then Pump. Just like I said this morning, I'm anticipating a dump to the 40K, 39 to 40K region. And actually, I have a limit to how much I think it can dump, and I'm going to talk about that, as well as what I'm anticipating immediately following the dump. Okay, and I did discuss that briefly in this morning's update as well, but I'm going to just reiterate that point. And I'm also going to talk about how you could possibly trade this if you haven't yet been involved, as well as how you can trade the dump and how you can trade the pump. So all of that and more, stay tuned. Okay, so on the 15-minute time frame, I'm seeing, as I said before, a three-wave move that we put in already, and that just basically sets the stage for this whole thing, right? Because we know that we're getting a 3-3-5 move. This is a regular flat correction, right? Using Elliott wave theory, it gives us a lot of context. It's a powerful tool to contextualize corrective sequences, right? A lot of traders who may not use Elliott wave theory, may not use any kind of, if they don't use Elliott wave theory, it's very difficult for them to make sense of what they would call chop, right? The up and down or sideways action. But in Elliott wave theory, this is, as I said, just a simple flat correction. And even more than that, we know that because this is a three-wave move, we're getting three waves here, and these three waves come to at least the 786 of these three waves. So I have my target set for take profit at the 786, okay? And that is around $40,100, okay? $40,100 on this chart. Actually, specifically, it's for $40,082, but I always take profit a little before the target's met. Just in terms of proper execution, you don't want to miss your take profit. All right, so that's basically where I'm targeting it. But here's the maximum. So let's look more closely at this wave, this what we're calling the B wave. So 1, 2, 3 waves right here. Okay. I think that this B wave is comprised of, it's a little tricky, but we have a few parts in it, and B waves are by definition complex, right? They have a lot going for them. They can come in all shapes, sizes, and colors. They can retrace anywhere from the 0.5 Fibonacci retracement of the A wave to the 1618, okay? And they can be complex, they can be simple. So this is one of the reasons that I set this trade, I made this trade with very low leverage, because I had no idea where to set my stops. I had a feeling, I knew that this was, sort of a corrective move upwards, right? Because I saw three waves. So I know that we're coming down. I don't know exactly how we're going to matriculate downward. So that was my issue. So I just made sure that I set my leverage low enough so that my liquidation point is way up here somewhere, and there's no chance of it kind of getting hit if this move is correct. That is pretty risky, but I'm a discretionary rules-based trader, and so I do have strict rules for certain trades, especially on higher leverage, but for kind of little moves like this, I try not to be fearful. I try to trust my reads and manually set stops. Meaning, if I monitored this trade and I saw that indeed this was not an A wave or this was not a B wave, then I would kind of try and cut it when I could. Anyway, not to digress too much into the weeds, into my trading strategy. Back to this B wave. Like, what is it? It's tricky, yeah? So what I'm seeing is this is the pivot out of the A wave, okay? So we have an A wave and a B wave, and then you have the impulse of this B wave right there. And the impulse of this B wave to me seems like a ending diagonal. So at 33333. So that gives you a bunch of chop up and down. It's a sort of a channel, downwards channel. What I get here for me, once we get to this point, we start reversing, okay? And that's what I'm seeing here. So you can say actually, but it's not true. So this B wave, I think this is part of the B wave right here. Like this, what we've been getting here and what we're going to get here is part of the B wave, and it has to be part of the B wave. Why? Because we know, according to Elliott wave theory, the B wave must retrace to a minimum of the 786, and we haven't had the minimum 786 retracement of the B wave, right? Just prove it to yourselves really quickly. Take your Fibonacci retracement tool from the bottom of that A wave to the top. The 786, like I said, is around $40,080. Okay, we haven't hit $40,080. So whatever this B wave is, it's not finished, and this must be part of it because it would help the B wave come down to where the minimum retracement of its B wave. Now, what I'm seeing in this B wave, and I could be wrong. It's hard to read, right? And you don't necessarily always want to make trades based on how you're reading a B wave, because they're not really. It's a lot to read, right? It's tough. It's tough, as I said. But what I'm seeing here is the following. I'm seeing this as a type of A wave, okay? And it comes in 3 waves. 1, 2, 3. This could be one big corrective move, okay? I don't know. But it actually doesn't matter. And I'll tell you why in a second. So I'm seeing this as an A wave, okay? Initial break of structure. This is the structure. It's a downwards kind of, it's a downtrend. It's a downwards impulse. This breaks the structure. This, what I'm calling A wave, breaks the structure. Again, I don't actually have to know how this all fits in. I can kind of read this in isolation, because this could just be an intermittent kind of retracement within this downwards pattern. But here's why I don't necessarily need to know. This is an A wave. So immediately after, we would get a 3-wave corrective B wave, okay? 1, 2, 3. Right? That's what you get. And then you get a C wave, okay? Now, 2 things that can happen. Or sorry, you get a C-section, which is a pivot, and then a retracement up, if this is indeed a correction, intra-wave correction. But it just doesn't seem like an intra-wave correction because it seems massive compared to all of this price action. It seems like it is a reversal that is kind of part and parcel with this larger B wave, but it's a reversal, and it's going to help us go into our 5-wave uptrend. Okay, let's kind of, there we go. All right, so what I'm seeing is the maximal retracement for this dump, this downtrend, in my estimation, if this indeed is an A wave, a 3-wave move, and actually the 3-wave moves like this, yeah? Then the maximum is, as we know, the B wave retraces to a maximum of the 1618 of the A wave. So I would take the full length of this A wave from bottom to top with the Fibonacci retracement tool, and I would spy the 1618, which is 39.8. Okay, so I'm seeing the B wave come down to a maximum of 39.8. Typically what happens is, in my experience, this B wave, you're going to see a big dump. It's going to kind of like flash dump, okay? It's not going to just matriculate down. It's going to flash dump once it's ready to go. And it typically kind of peaks its head right past the 1236. That's what I typically see in these flash dumps. They're hard to trade because it's hard to enter, okay? Hard to trade because it's hard to enter. Where do you enter in all of this noise? And we're going to talk about that in a second. But they're really nice because they're quick profit. If you can catch these, you're getting a quick profit, you know, a nice quick short. So now, typically, the target for these B waves, the C wave of the B wave, if you see this right here, let's just map it right here. If this is A of B, this complex correction W, X, Y, X, Z is, and then the pivot, B of B. The C of B typically extends to the 1618. Okay, in my experience, I've seen that 1618. So I would imagine, and I've got my target set. I don't know what I have my target set to. I don't remember. But I probably should have my target set to about 40,100. Okay, and if you take back our Fibonacci retracement tool of this A wave, you see that exactly what I was talking about. It just juts right past the 1236. It doesn't necessarily test the 1618, which is the maximum extension, but that's usually what it looks like. That 1618 is a pretty reliable target. Okay, so I'm pretty sure I have that as my target here. Let me just check. Let's see. Let's see. Goes like this. Oh, no. You know why? I have it lower because I have it at the 786. Because the 786 is the minimum retracement. So this 1618 doesn't represent the full extension of the larger B wave. That's why I don't have it as my extension. Okay. I was like, I should have it like that, but I don't, and there's a reason I changed it. Okay, there's a reason I changed it, because the 786 is a tad lower. Okay, so that's what I'm seeing right there for the dump, and I think we're going to get this dump any moment now. Why? Let's go on smaller time frames and just examine this right here, this B wave of B. And like I said, you're getting a complex correction. I think you're getting a 333, which is a W, X, Y, X, Z correction, okay? And then this is a pivot. So initial break of structure right here. This is your B wave, right? And then now you start to get an impulse down, and we're in impulse down, okay? So we should retrace a little bit, break structure. And as I said, this doesn't really, typically, this move happens quickly. You should see it just, boom, dump quite quickly. And I do think that it's just going to make its way down. It's probably going to hit the 1618 extension, right? So I can see it dump down and find support at around 40,126 or 40,100, right? And like I put in this pink line, bounce off, form another mini reversal. So that would be A, this would be B. And then what I anticipate is, like I said this morning, I anticipate that initial diagonal or leading diagonal. I don't know why I like to call it initial diagonal. I anticipate getting something like that right here, okay? And I'm getting in, as I said this morning, at the retracement. Once I see 5 waves and I spy 5 waves here, I'm getting in down here, stops behind the 618 of this entire move, okay? That's what I'm saying. That's how I'm going to safely long this, and I'm turning up my leverage because I like this move. I like how we're likely going to test 45 and then eventually break it, because I'm seeing that the move up is going to probably make the first wave to 45, 46, and then a 2 wave down, and then continue with the 3 wave, and then wave 4, and then wave 5, and basically test 55, 56K, the 618 of the 73-day downtrend. So that's what I'm seeing. Now, let's just address how you can get in. So I'm in a short now. You can see I'm down. I've been up and down, right? Because this has been going up and down. But my entry point's here. It's a sloppy entry, okay? Not proud of this entry. Don't like it. I could have done much better. And so I'm going to talk through how I could have done much better. So I wasn't patient. And that's one of the things, good trading is boring. You have to wait. You have to wait for your setup to develop. And I'll tell you my ideal setup. If I was, perfectly disciplined, what I would have done. Hey, Nicholas. Yeah, of course. Yeah. Like I said, I'm seeing this dump, coming down to the 39 to 40K region. And this dump can't, in my estimation, go past 39,800, right? Because if this is an A wave right here, the 1618 of this A wave is, whoops, wrong tool. If this is an A wave right here, the 1618 of this A wave is around 39.8. So I don't see us going past 39.8. Okay, and that would be, let me just say, that would be reassuring for people looking at the general market structure, because if we do extend past much further past this top right here, do you see we have a lot of good support here? There's a lot of good support around 39.8, which is the maximum retracement of this move, I think. Right? If we go past that, we're coming back into this area right here. We're coming back into this slog of sideways price action. And that would mean a lot more sideways price action, a lot more consolidation, right? So I think this is the line. If we want to continue upwards, that 1618 should be respected. That 1618 of the A wave. Yeah. So anyway, back to how to get in this. So I made a sloppy entry. What I would have done if I were to redo my entry, and I like to think about this because trading is a process, and I like to look at my previous trades and see how I could have perfected them. And it's all about perfecting the process. I don't care if I win this trade. I don't like how I did this trade. For me, I count it as a loss, whether I make money or not. I'm likely to make money, but even if I entered a low leverage, I want to make a better entry. So if I'm perceiving a downtrend, which I did, right? Last night I perceived a downtrend. I saw that we broke the 1618 of this level right here, right? So this 5 wave pump, I saw that was violated, so I got stopped out of my long, and I was like, okay, if we breach the 618, we're no longer in impulse. Okay, here, there we go. So the second we breached the 618 here, and we did this, and then we came here and we didn't go up, but we went down. I was stopped out, and I knew there's more downwards price action. Okay, so immediately I started thinking, okay, let's go short. I don't know how, but I'm starting to think short. All right, so if I'm thinking short at this point, the best thing to do is to not FOMO into this, because you don't know when it's going to end and it's going to bounce back, right? Wait. And it seems as if what I saw, this big candle on the volume bar, showed me the end of this trend. Okay? It's a capitulative candle. Even if it's maybe it's the end of a wave 3 or something like that, but it's an end of a trend. Maybe it's not the end of the actual complete wave, but it may be, yeah. So I started seeing this, okay, and I actually was under the impression that this was a wave 3. So my initial thought was, I'm going to get in and pull a fib from the top of this to the bottom of, no, what did I do? Yeah, that's what I wanted to do. I pulled the fib from the top of what I thought was wave 2 to the bottom of what I thought was wave 3. Okay, and I was like, I'm just going to imagine that we're going to get rejected at the 382 and we're going to come down. But that wasn't correct. And what I didn't execute properly. Even on a small time frame, had I executed properly, here's what I would have done. And here's what it would have looked like. To execute properly, even if I had that idea and it was wrong, had I executed properly, I would have gotten confirmation before getting into the short. So what would it have looked like? It would have looked something like this. Let's just use this as an example. Okay, we go up, whatever the correction is, it doesn't matter. You always get a rejection, an initial rejection, okay? That's your initial rejection, your A wave, okay? You get a retest of that, okay? A retest, which is a B wave. And then you get a pivot. And this is a pivot. And that pivot then should make a lower low before you jump in, according to what I think is a safe entry, okay? If I want to go short, I'm waiting for the initial wave, the initial break of structure, the B wave, which is the retest, and the pivot, which I call C-section, right? The pivot. So these 3 sets, this is the reversal pattern I talk about ad nauseum on this channel. 3 sets of corrective waves. This C-section, and then still, I don't want to jump in because see what happened. We got this pivot, but then we kept going up. Had you waited for the lower low and jumped in here, you would have caught the move. And if you didn't get that, you wouldn't have gotten in. Does that make sense? So this is what makes trading difficult. It's not conceptually difficult. This is easy to understand. This is not rocket science. It's just that it takes time. It takes time and discipline to know that you're going short, know that the market's going short, yet and still wait all of 3 hours and 30 minutes on the 1 minute time frame. We're on the small ass time frame, but you have to wait 3 hours and 30 minutes for something to play out, and you still may not even get in, okay? That is what separates, I think, the good from the great, the professional from the semi-pros, maybe. Like the consistency and the discipline to be able to wait for that to develop, for that to materialize completely, right? Had I executed, and yesterday I was, it was like my wife was pissing me off, and I was I just wanted to get in, and that's not good. That's not what a professional trader does. I'm a professional trader, but I did not enter this trade as a professional trader or like a professional trader. I entered it like a sloppy amateur because I didn't wait for my reversal pattern to play out. And again, these patterns are time frame agnostic. It does not matter what time frame it's on. It doesn't matter if it's a little move. I'm like, yeah, I'm just gonna hide my stops behind the 382. It's probably gonna. That's how you lose money, because it just takes one bad trade, and 5, 6, 7 wins are erased. Do you see? Because, if I don't know, if I'm putting my stops behind the 382, I don't know if it's a wave 4. I'm just assuming it's a wave 4. What if it's not a wave 4? I just get stopped out. I lose money stupidly instead of just waiting and letting everything mature. And had I waited for my A wave, my B wave, and my pivot to play out, and then my lower low to play out, then I wouldn't have gotten in the trade. I would have waited, gone to sleep, waited, seen that pretty much all day on the following day. Whoops. And granted, that was 3.5 hours that would have played out on the minute time frame. So imagine a larger move on the 5 or 15 minute time frame. Sometimes it takes days to mature. That's the kind of psychopathic, I'll say, patience. Like, you gotta be like a psychopath to wait 5 to 7 days just to make a trade. That's what separates the pros from the amateurs. The amateurs aren't going to wait that long, even if they know they should. You see what I mean? You kind of got to be sick in the head to do this professionally and to do it right and consistently every single time. Every single time. Even if I knew this was going down. I knew this was going down 48 hours ago, and I wanted to get in because, that's just how people are. Let me just get in. Lower the leverage. Well, whatever. It doesn't match. I don't care if she's watching. Nicholas, I'm mad at her. She knows I'm mad with her, so it's okay. You gotta. Something's gotta be wrong with you, right? For you to be so disciplined. But that's the kind of discipline it takes to be consistent. Because if you do that consistently, you will win consistently, and you will not lose consistently, or you will lose very small because you will make very, very few mistakes. One thing is to have a good trading plan, okay? I can have a good trading plan that, every time price changes direction, it puts in this reversal pattern. I know that. But do I have the discipline to wait and observe the trading the reversal pattern every time? That's the question. If the answer is yes, you can be a pro. It doesn't matter if you're using Elliott wave theory or reversal, whatever. If you are sick enough, I'll say sick because there's got to be something wrong with you. You can master delayed gratification. You're like a robot. If you're that good, that disciplined rather, you can be a pro. You can be a pro. So I hope that helps, with answering the question, how I would have entered this if I wasn't so impatient and, I didn't let the fact that my wife was pissing me off get to me, and, I'm not making excuses, but I fucked up. And even if I do win this trade, I could have won a lot more money because, look, I got in at this dotted line right here, but I could have gotten in way higher, right? I could have gotten in up here. I could have gotten in up here, right? But whatever, you know what I mean? And fine, this time I got lucky. I got in where I did. I may have gotten in much if I didn't get lucky, I may have gotten in much lower than this even, and I may even have gotten stopped out or liquidated. Do you see what I mean? I got lucky. When you don't follow your rules, when you're not disciplined, and you win the trade, chalk that up to luck, okay? And that isn't good enough to be a pro, because to be a pro, you have to be consistent. And if you're chalking it up to luck, there's going to be one day you're unlucky, you get stopped out, the past 6, 7 wins get erased. Boom. And you lose your momentum, you lose your ability to compound gains, right? Not good. Not good. But the good thing about a pro, the pro thing I'm doing right now is I'm dissecting my failures. In all of your failures, whether you won money or you lost money, is your professional career, are your future wins. Okay, my mentor, Oliver Valdez, says this. If you can dissect your failures well enough, consistently enough, you will find your future wins. So that's a pro thing to do, you know. Amateurs, hey captain. Amateurs, you know, if they win money, they think they did well. Amateurs don't really go through their processes, right? Professionals are all about their process. So I'm always looking like, how could I have done that? Could I even make this trade? Is this a trade I should even take? Is this a trade I can even take? Is this a high enough probability trade? Using my system with my reversal pattern, I can take most trades. I don't know if there's a trade I can't take. Not all of them are the same high probability trades, but they're high enough probability, especially if I modulate the leverage. So yeah, that's how I would have taken this trade. I would have waited first and foremost for that reversal pattern here. I would have seen and observed. That's the toughest part. Observe and not do anything. Sit on your hands. I would have observed this going up. I would not have known what it was. This morning I was like, I don't know what this is. Okay? I don't know what this is. And that's fine. Sometimes you have to be comfortable not knowing. And then I see this and that, and I'm like, okay, I see 3 waves. Okay? And then I see this, and I'm like, okay, that is clear to me that this is a break of structure. And it's breaking this downtrend, right? And then I saw all of this stuff, this chop. I'm like, okay, that's a complex correction. That's a B of B. I'm seeing a B wave. Then it gets more clear. But you don't get the clear picture without waiting. And waiting some of the hardest things to do in trading, especially if you know you have skills, you know you have knowledge, you're eager to make money. It's hard to wait. Don't rush it. You do not have to rush, and you should not rush. Rushing is actually the best way to lose money. Easiest way to lose money, right? Taking your time, really being cold, calculated, soulless, fucking psychopathic. That's the best way to win. You just don't care how long it took. You don't care. You don't care that, you would have had to wait 15 hours and you'd have to have gone to sleep. And if you went to sleep and the trade played out while you slept, you don't care because you're not going to rush into anything. That's what makes trading difficult. The rest of it, it's kind of easy, right? Who here does not understand, and I'm not saying that this is the only system and you have to follow my system, right? Everybody has a different system. But who here does not understand the concept of a reversal pattern? It's stupid simple. It's 3 sets of corrective waves, and they result in a change of trend. Duh, right? That's it. That's simple. You get an A wave, a B wave, and then a C section, right? A can be a flat correction or a zigzag. B can be flat zigzag or a triangle. C can be usually is comprised of a flat, and it can be flat zigzag or a triangle and then followed by an impulse, in the opposite direction of the trend. So, right, if the trend was going down, then C goes up. If the trend was going up, then, A is going to be different. But you get my gist. This is a reversal pattern to the upside, reversing to the upside. So yeah, you follow that. You get in on the lows, you get in on the highs. You can literally short the highs and long the lows. And then after that, remember, you still want to be careful, because even after that plays out, for instance, let's just look at this. Let's look at examples, because there is no scenario where price changes that you don't see this. There is no scenario that you do not see a reversal pattern. So I'm just going to take this present scenario right here. Identify. And this is the power of Elliott wave theory. It's powerful as hell if you know how to use it, and a lot of people don't. A lot of people, they learn the rudiments and they don't learn it well enough, and it's still useful to them to a certain extent. But if you really learn this stuff, it's like a superpower in charting and trading. It can be used as a very powerful trading tool on all time frames, scalping, swinging, longing, position trading. Anyway, so as I said, got 3 waves here. You see a bit of a pivot into the start of a B wave. Okay, this is the first wave of this B wave. This is the second wave of this B wave. Right after it's finished, you see my Z ends here, not here. Why? Because you need a pivot. Here's an A wave, initial break of structure. For all of this stuff, it broke the structure. It says no more, complex correction. A wave, after that you get a break and then retest. The retest is the B wave. This is right here the start of the trend, okay? This is the start of the trend down. So just zooming out once more, this is the B wave, A of B. This is B of B. This is the start of C of B. C of B will take us down, okay, impulsively. Now, you don't get in if you're a professional, if you have good risk management. You don't get in here no matter how well you read it, because there is a high probability. It's not a high enough probability trade. You can misread it. You can be misreading the complex correction. It's too low probability. You can get right. You can be right, but there's a chance you can be wrong. So what do? You wait for this to play out. You wait for the retest. You only trade impulses, basically. You don't trade chop. You don't trade complex correction. You only trade impulses. So once the impulse goes, you wait for your 2 wave. And once your 2 wave goes, you see the same thing in your 2 wave. Maybe it's a simple, ABC correction here. You're going to get, just as always, a rejection on the small time frame. You can jump in down to the small time frame. You're going to get a rejection. You're going to get a retest. And then after that retest, you're going to get a pivot. And then you're going to get a break. Once that break, if you're shorting, forms a lower low, you get in. Instead of being first to the party, be late. Make sure the party's actually happening, right? That's what a pro does. A pro doesn't have to get in right here. And this is getting into, I hope you guys appreciate this. And please don't forget to like the stream. But this is getting into minutia. You could say, it's enough to say, hey, Dean, relax, bro. Like, first of all, it's clear what's going on here. You could just get in right now. You could, but again, amateurs are like, yeah, okay, whatever. Pros are obsessed with process and detail. I don't care if I know with 98% certainty that this is an impulse and it's going all the way down to 0. I'm going to follow my rules, and my rules state that I'm waiting for this first impulse to play out, and I'm only getting in on the retest, and not even on the retest. But once the retest happens, I'm going to wait for the break of the retest. I'm going to wait for the retest of of that break, and then I'm going to wait for the impulse to resume and to make a lower low. And that is when I market sell. I market order my sell right here. Does that make sense? Like, you can get that particular. If I follow if I follow my process, I could hit WD GAN levels of accuracy in terms of my wins. I could win 95% of my trades, right? But I don't. So I don't win 95% of my trades, right? But the process is pretty much flawless. It's the operator, it's the execution that needs work, right? Sometimes the process, some traders have a process that is not that, accurate, right? But they're still profitable traders because, they're just playing the odds like a casino. But using Elliott wave theory, we can develop really, really, really highly accurate processes in the 90s. But it's going to take a lot of solid, careful execution to play out or to execute, right? And if you're patient enough, and if you're committed enough, and if you're mental enough to literally wait for all this shit to play out, and if it doesn't play out, you literally drop what you're doing, you go to sleep, you leave what you're doing, you do not get into the trade, you will win 90+% of your trades, I guarantee it. Because that's how solid this theory is. I think if you really think about it and look at all the systems there are in charting trading, Elliott wave theory is probably the most powerful, and I'm not just saying that because I practice it. It's just is. Tell me anything else that gives you this level of accuracy, this level of consistency. I don't think it exists. Hey, cool. Yeah, Nicholas, sometimes I do sleep with my long or short open. I don't have that rule. As long as I follow what I just said, I can go to sleep with it. I can go on vacation with it. If I'm careful, like for instance, in this, if I were more disciplined, if I was the trader that I aspire to be, I'm still not there, but I aspire to be this trader that really is clinical with how I execute. I'm waiting for these 5 waves to play out. I'm waiting for this retest. I'm waiting for the initial rejection. I'm waiting for the retest of the initial rejection. I'm waiting for the pivot. I'm waiting for the lower low of the trend. I'm market selling that. And then I'm setting my stops here at the 618 of this. Right here, my stop. Okay, I can go to sleep with that stop put in, right? Because it's a great trade. That's an excellent trade any day of the week. It's an excellent trade if I'm looking at the chart. It's an excellent trade if I break my computer and never look at the chart again. As long as I set my take profit conservatively, and so it's going to hit, right? I know that it's going to hit because, let's say, for instance, in this case, I set it at the 786 of the larger A wave, right? I know that it's going to hit. That's almost as definite as anything can be in trading, right? If I put that stop, I'm comfortable taking that loss because that is a great trade. It is high possible win, or what am I talking about? The reward is so much higher than the risk. I'm taking that trade 10 times out of 10. So yeah, in that case, I go to sleep with it. I don't like to live in a world where I can't take a trade unless I'm looking at it, right? Or else then what are you doing? Can you not travel? Can you not talk to your kid? Can you not go to the bathroom? That just, I think in that case, you may not have a good plan. If you're the type of trader, and I don't know, maybe, everybody's different. I'm sure there are some really great, successful, profitable traders with great systems that have to look at their trades, but that basically tells me that you're manually executing, and eventually that's going to come to bite you, because if you have a bad day where you have a headache and your wife is pissing you off, and you're basically manually controlling when you're stopping out, when to say uncle, when the trade is going against you and you're leaving, you're going to make a mistake, or you're going to get emotional, and one day you're going to be like, I really want to win this trade. I don't want to get stopped out. You're not going to press that button, and it's going It's going to liquidate you one of these days. So yeah, that's what I'm saying. I think the system, you should have a system that you're able to live with even when you're sleeping and you're not looking at your charts, in my opinion. But that's just my opinion, and that's how I like to trade. But even still, I do get nervous sometimes, and I like to look at what's going on. So yeah, that's what I'm seeing. And yeah, guys, don't forget to like the stream, and definitely, yeah, let me know what you guys think. As I said, I think a lot of you guys are traders, so I think more and more I'm going to address trading, because trading is such an involved undertaking. It requires thousands of hours of practice and dedication just to get good at. 92% of people that undertake it professionally quit, right? And there's a reason for that. There's a reason only few can make it trading, right? And so I think it's important, if you're interested in trading, if that's something you want to pursue professionally, right? You want to generate income from trading, not just buying and holding, but trading. I think that's something that you may want to look into, or I don't know. I think it's useful for me to share my experience, useful to me to share my perspective, to share my journey, because there might be somebody out there that's like, you know what, I really want to do this, and that's helpful to me, just hearing what he's going through. But it doesn't mean that just because you hear me go through it, you cannot go through it. I think anybody that's mastered this or mastering this, right? There's always levels, higher levels, I think. You're going to need to go through the pain. You're going to need to get to the point where you curl up in a ball and you want to quit, and you think you're a loser, and you lose money, and you think, I all I can do is lose money. I don't know what I'm doing. I thought I knew what I was doing. You have to go through all of that. You got to feel like you're on top of the world, because you're on a win streak, and you're like, I'm the best. And then a few days later, you're like, I quit. I got to get a job, right? All of that stuff is part and parcel of the whole journey, I believe. I don't know anybody that trades professionally that hasn't gone through all of that. So I like to share, because I feel like the more we share, maybe the more we can help one another get through, right? And if you don't quit and you're dedicated and you keep working at it, you're going to get it eventually. You're going to get it, and you're going to master this. You're going to make more money than you thought you could make, and you're going to live a life that you only dreamed, because, you make money when you want to make money, and your earning potential is unlimited. Not like, you have to wait for somebody to promote you or to evaluate you. You don't have to deal with all that. So, yeah. That's what I'm seeing. That's why I'm seeing it. And that's how I would trade it if I was a little more disciplined. That disciplined trader with a 95% win rate is in me. And I'm going to get there. It's going to take holding my hands, sitting on my hands, waiting, going to sleep, missing maybe some opportunities. But you know what? Every time I've thought to myself, I got to get in. There's a voice in my head that says, I got to get into this trade, because if I don't, and I know, Dean, like, your reads are fire, dude. You can read charts. Like, you don't get you don't get them all, but you read quite well. You have a high hit rate. That's your edge. If you don't get into this right now, there's a fucking little voice on my left shoulder, the little devil. If you don't get into this right now, you're going to miss this move. If you go to bed without clicking that button, I guarantee you're going to wake up and you're going to see the price go in the direction you thought it would, and you're going to be like, damn, I should have done. That's never happened. Not once. That's never, I guarantee you, it's never happened. Maybe once in the years I've traded, it's happened maybe once, but it's never fucking happened. So every single time, I tell myself, dude, I know this isn't really the ideal entry, but this is good enough, and you're kind of tired, and why don't you just get in, set some loose stops, and, just to get in, because you don't want to miss it. These moves take time. And that's what an impatient, undisciplined trader says. That voice, if you hear that, do the opposite. That voice is never right. And even if they're right 1 out of 100 times. The voice that says, no, this is not the ideal entry, go to bed. Wake up, I guarantee you 9 times out of 10, 9.5, 9.9 times out of 10, you're going to wake up with a better opportunity. Because most of the time, these moves take longer than we thought. This whole thing, from the end of this move, if this was, so let's say this was the capitulation candle for this downtrend, right? Let's say this downtrend ended right here. And this indeed is an initial break of structure A wave. All of this, before getting, we're not even, actually, according to my rules, we're still not in a position. If I wasn't in this trade, I would still not be in a position to take the trade. How infuriating is that? There's a part of me that's saying, Dean, what are you doing? The price is going down. You're losing money, opportunity costs. No. Because we have our A wave right here. We have our B wave. We have our pivot. We have our initial impulse. I'm waiting for a retest, pivot, and a lower low. It seems like overkill, but you do that 100 times, you win. Maybe you're not getting 100% of the move. Maybe you're getting 95% of the move. But you're cutting your error, your margin for error from, you're making this 60% probable a win to 95% probable win. You cut out so many errors, and basically your job as a pro trader, as a serious trader, as a consistently profitable trader, is to preclude big losses. And you preclude big losses by using good risk management, and that's good risk management. But to do that, you would have had to wait 21 hours and still just fucking wait and just watch this. You that's what I'm saying. You gotta be a sicko. But you know what? I think I'm close because I've lost enough and taken enough losses that hurt bad enough where if that voice comes and says, hey, Dean, dude, just get in. All right, we get it. You like the process and everything like that, but it's going down and it's quite clear that it's going down. Your read was correct. Just get in the fucking move. And then the other voice on the right side will say, hey, remember when you didn't follow your process? Remember when you flout your process? Remember that last move you took and your read was a little off? It wasn't completely wrong, but it was a little off. And you set your stop and you got stopped out. Remember that? Or remember that where your read was completely off because you got tricked and it was tough to read. But because you didn't follow your process, you would have caught it if you followed your process, but you didn't follow your process, right? Those losses hurt enough where they sort of evince some visceral memory that help counteract that one, hey, just get in the trade. And that's why I think sometimes when I think about my trading journey, the losses, I don't know if I would have become the trader, even thought of I don't think I would have even thought of wanting to be the trader I want to be without the losses. I wouldn't even thought of being that consistent and that disciplined without the losses really put you, it sobers you. It sobers you, right? It makes you that sicko, that cold, calculated, manipulative, or like manipulator or like executioner of this price action, right? You know? Let's see. Do you see an ABCDE triangle here? I charted one on the 15-minute chart. ABCDE. Yeah, you know, so cool. I see a WXYXZ. So ABCDE is a correction. I think this is more accurate, actually, to say it's ABCDE, because the WXYXZ is what you get. I mean, it could be no. See, let's see. ABCDE is triangle, okay? So maybe I think WXYXZ may be more fitting, but it's close. It's just that you don't have. Let's see. You don't have as good integrity of a triangle here. I mean, it's not. The spirit of it is accurate, but I think this is more precisely, more accurately designated as a 333 complex correction, right? ABCDE, right, is your triangle corrections. So you would get, you know, either a contracting. Here, let's just look at it. Let's look at it right here. Let's see. So yeah, you have all your triangles, as you know, and I know cool you have the same, you know, Kindle version as well. But yeah, it's one of your triangles, right? So either contracting, barrier, expanding, or running. I just don't see it there. But it's not that important, to be honest with you, because at the end of the day, you correctly identified a complex corrective price action, and more importantly, it's the B wave of a B wave. So you know that this is your initial impulse or your A wave. This is the direction that this move is going. This is the counter trend, whatever it is, ABCD, WXYZ, you know, LMNOP, whatever. And then you're coming down. That's, I think, you know, just without trying to get bogged down into semantics, that's the most important thing to understand. That this is a 3-wave move. This is the first of 3. This is the second of 3. It's a bunch of chop. And this is the impulsive wave. And this is where you want to take the trade, somewhere in this region. So, yeah, that's how I'm seeing it. So my triangle starts way before the A wave is the wave up after the initial dump from 42.4 level. Oh, yeah, you told me about that. You showed me something. 42.4. Oops. I'm trying to remember your chart. Let's see. You said way before the A wave is the wave up after the initial dump from 42.4. Initial dump from 42.4. Okay, yeah, right here. Oh, okay. So way before the A is the wave up after. Okay, I see what you mean. Dump from 42.4. I see what you mean. So you're saying, let me just erase this. You're saying here, right here. Something like this, yeah? Yeah, it's possible. It's possible. I just don't see how it fits in the larger scheme, right? So typically triangles are B waves. Okay, good. So yeah, let me know if I have that right. But typically, triangles are B waves. Yeah. So you get they're intermittent sort of trends. So if this were a triangle of some sort, I would say that this is something like this, right? So you have your three-wave structure. Typically, you have an A, you got a triangle that represents a B, and then you have your impulse C. I just, again, I don't think it's wrong because at the end of the day, you're still getting similar result. But again, I would to focus on process, and you don't want to just read willy-nilly because even though you get the you win the trade, you understand the general direction that price is going, you don't want to develop bad habits where later on you kind of misread something because you misread it and you don't really have a good sense for what's going on. So I would say that doesn't really make much sense given this. This is the only reason. I think, you know what I think? Cool. I think us Elliotticians, we like to complicate things. Generally, okay? I watch a lot of Elliotticians. There aren't that many, like serious Elliotticians, right? Out in public. So I do follow a lot of their work, and my general sense, I could be wrong, but my general sense is that we don't really respect Occam's razor. The idea that generally the simplest explanation is the most likely, right? That seems a bit complicated, complex, unnecessarily so, right? Because if you have an A wave here, right? Just zooming out, you have an A wave. This is clear, three waves. It's very, very clear. Actually, it's so clear that I should have known that this would happen. And that is kind of a mental note that I made. You get 5 waves here. You clearly get a B wave here. That's not a wave 2. I kind of made that into a wave 2. I noticed later on I made it into a wave 2 because I wanted to see a wave 2. Obviously, it respected the 618. So I'm like, oh, that's a wave 2 to me. And then when we stopped, and this was a 1-to-1, right? Basically, this is a perfect. This is the same distance as this. That's 3 waves. That's textbook 3 waves. Okay? It can't get more A wave than this. Okay? This is a corrective wave. Means whatever comes after this is a B wave. So within that B wave, who knows? I still don't know what the hell this is. I'm not going to put money on, this is ending diagonal and blah, 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 whatever. I don't fucking know. I don't know. It's just all I know with kind of a high degree of certainty is that this is an A wave and this is a B wave. And if we want to keep it simple, and I think the more you simplify things, the easier and more profitable you can be, because you remove a lot of moving parts, you remove a lot of room for error, because the more you add, the more the more possibility you have for error. You get a B wave, and a B wave, just like an A wave, is 3 waves. 1, 2, 3. Boom. So you know that you're getting 3 waves and that you're matriculating downwards. But also, you know that this third wave is impulsive, okay? So I just wouldn't stick a triangle in here. I wouldn't stick a triangle here. Although, we may be saying the same things. You know why? We may be saying the same things. Okay? And you may be just looking at it from a different perspective. Here's what I think. Okay? What I'm saying is that the whole trend goes from here and it's finished right there. Okay? That's the end of the trend. And basically following that, you have a reversal pattern, and that reversal pattern is going to take you to your minimum 786 retracement. I think you're saying the same thing. You're basically saying that your triangle is our reversal pattern, and the breakdown is, your B wave or whatever. And I guess it's correct. I just, maybe it's technically accurate to look at it in that way. I just wouldn't look at it in that way because it's just added complexity for me. You know what I mean? But yeah, there's no need to even bust out, your complex corrections. Just A, B, C, boom. This is the impulsive part of B. Even without knowing all this stuff, you know that it comes to the 786 minimum retracement. And then after this, you're getting 5 waves. And you don't get 5 waves without a pivot. But if you spy your pivot here, you know that, boom, you're good. You're getting your larger A wave here. Whoops. You're getting your larger A wave here, your B wave here, and then your small pivot into 5. That's what I'm seeing. Just simple. Your reversal pattern. Just like any change in market structure, any change in price direction needs your reversal pattern. So you're getting your reversal pattern. Your reversal pattern is kind of tacked on to your impulse. So that's what I'm seeing. That's how I like to kind of think about it. I like to keep it simple because it's complicated enough. You know what I mean? There's so many different things that can happen when you're reading these charts. The market can do a million different things. So I really like to keep it as simple as possible when given the option. Hey, Steve. But yeah, everybody's mind thinks differently and looks at things differently, but you may still reach the same conclusions. And that's one of the awesome things about trading and charting and stuff like that. It's the same shit. It's just a puzzle that we're looking at with our different minds, and we all think differently, and that's okay. But yeah, that's how I'm seeing it, and that's what I'm seeing. But yeah, very, very. I'm very. I'll tell you my emotions because people like to talk about emotions being a trader's worst enemy, and I partially agree. But I'm very excited for this move. I think everybody is, okay? I'm reading this move. I want that move to happen, if I'm being honest, okay? I'm not super objective. And so when I feel that way, I want to be careful about being blindsided to that not happening, right? Because, and I think this is kind of like my evolution as a trader. I recognize my excitement, my emotional excitement at getting in this trade. I'm in a short right now, but I'm excited at taking profit and flipping long. So part of me, if unchecked, will get into this long prematurely. But this is why we have our processes, right? And that's the little left or right angel saying, hey, Dean, remember that last time you were really excited to get in to a long or whatever into a move, and you wanted the price, and you're already counting the money, and you're gonna up your leverage, and you're gonna make good 5 figures, and you're gonna pay your mortgage, and you're gonna show your wife who keeps telling you hey, where's the money, get a job, whatever. You're gonna show everybody because you're gonna get in this move, and you're gonna ride it all the way to 55K, and you're gonna lounge, and you're just gonna watch the money grow. You have that in your mind, yeah? Knowing that I have that emotion and that feeling. It's not wrong. It's just I want to cover my back. I know what I'm thinking, and so I know that it can affect my analysis. So I'm actually looking for reasons for that not to happen. So earlier today, what I did was I thought, hey, wait, let's go on larger time frame and see if maybe this is not a likely occurrence. Maybe we go and continue further down, but then to me, it doesn't make sense because, again, you have a reversal pattern, right? And the reversal pattern starts with an A wave like this, the B wave like this, so I know the 5 waves coming up. So it's hard for me to find ways for it to go down, but still, I was like, okay, wait, maybe, on the larger time frames, we have yet to come down far enough or something. You know what I mean? I've played devil's advocate. I try to see if there's any validity technically to the counter move, right? But I don't, and you guys probably noticed this if you're following me, I don't like to say, well, I'm trading, if this happens, well, how can I express this? I'm equally anticipating both moves or something. I have no bias to either outcome. It could go up or down, and I'm prepared for both. Like, that's the biggest crock of shit. If you're prepared for both, then you don't know how to read the fucking charts, right? Because you can be prepared for both insofar as you have risk management, and if the trade goes against you, you don't get wrecked. But there's 3 things that you need to win a trade. The first of those things is knowing if the price is going to go up or down. If you have no idea whether the prices go up or down, you have no business even taking a trade, right? So, yeah, I'm not a big fan of that whole, I'm prepared for both outcomes equally. Like, no, you're not. And there's chances are you have a bias of some sort. And I think if you're honest with yourself, you're going to trade your bias and use proper risk management for the opposite. Or you're going to wait for confirmation for your bias. And if you don't get it, then you're going to flip to the other one. Maybe that's semantics, but I don't know. I just don't really buy into the whole, I'm equally prepared for both. And, I have a count that goes, so if here's this count that goes like this, and you get 5 ways there, and that count, you go down. Like, what the hell kind of bullshit is that? Like, I don't know. I'm not a fan of having 50 different counts for 50 different scenarios. So what the hell is the point? Which one do I trade, Yeah, it's so satisfying. I mean, like, this trading and charting, when you're doing it and you're actually able to sustain yourself and, like, win, I don't know if there's a higher dopamine hit. I mean, it's like people that are in casinos in Vegas don't have this kind of adrenaline and dopamine feedback that we traders and chartists get. Even if you're not trading it, just charting it and then watching your plan play out is hugely satisfying. And in the same vein, it's hugely disappointing to see your trade plan go to shit and, to get wrecked. It sucks. It hurts. Yeah, so I'm just waiting for this dump. And, well, oh no, now we're in. So okay, so like, yeah. So disciplined trader, Dean, that is a good, disciplined, profitable, 90+% win rate guy, has not yet even jumped into this short because he's waiting for this 2 wave to play out, reject, retest, pivot, make a lower low. Then he enters. That's psycho. Psycho Dean. I'm going to call him Psycho Dean. I plan to be Psycho Dean, okay? That's exactly who I plan to be, who I aspire to be. Psycho Dean. He's my spirit animal. Psychopath. He just watches price action and doesn't act on it until it reaches, his setup matures 100%. Psycho Dean. Wow. He's in there somewhere. Psycho Dean. I like him. He doesn't care what the left shoulder, devil says. Hey, man, it's getting kind of late. You've been watching this for 25 hours now. Are you going to pull the trigger, buddy? It's kind of going in your favor. It's likely to hit those targets. Why don't you just jump in the trade now? You know it's going to go there. Come on, man. Don't set stops. It's okay. Go to dinner. Go hang out with your son. It'll be there when you come back. You'll be in the trade. You'll be fine. What's that liquidation point? It's far. Famous last words. One of the things that I've said to myself, and every time this thought comes up, an alarm sounds, and I'm like, uh-oh. The idea that, dude, that liquidation point is far. That liquidation is far. Like, don't worry about it. Like, your liquidation so far. Almost every time I've said that, I've gotten close to liquidated. If not liquidated. Every time I've said, damn, I can get into this trade. That's no problem. Look, price is so far from the liquidation. 2-3 days later, I'm trapped and I'm close to the liquidation point. This shit is perfect, and I'm so happy for those experiences, the pain of those experiences, because I literally have a visceral distaste and detestation for that activity because of those experiences. I had to feel the pain for me to say I don't like that. And I want to remember how I got there. It was listening to that voice that said that, but the liquidation point is so far. Don't worry about it. Yeah, get into the trade. No problem. So yeah, it's playing out, and it's likely to give us our target. So we have our first 5 waves. What we can do with our first 5 waves is project, okay? Do minimum projection. So let's do that right now, and that'll be the last thing I do before I close the stream and go for dinner. So first of all, let's measure the 0618, just assuming that the 2-wave retracement takes us all the way up here. Okay, let's draw a line up here. Okay, and now what we're going to do is going to take the Fibonacci extension tool from the top, bottom, retracement all the way to 618. That's the maximum retracement of the 2-wave, okay? And what we're going to do is we're going to project the 2236. And I've said this before, it's like one of my little tricks, but I've noticed in my trading that the minimum extension of any impulse, up or down, diagonal, zigzag, or diagonal or not, is the 2236 Fibonacci extension. And mathematically, I think it works because minimum extension of wave 3 for wave 1 is the 1 extension. Usually you get 1618 to 2. Okay, minimum extension of wave 5 from wave 3 is the 618. And so adding all of those things together, some way, somehow, you get the 2236. I didn't like derive it mathematically. I just, charted for thousands and thousands and thousands, tens of thousands of hours. And I've noticed this because I pull Fibonacci extensions all the time, and I've never seen an extension, not once, hit below the 2236. And when I did think I found it, I was in wave 4, and then wave 5 took me below the 2236. So that's a little trick that I found just trading and charting. So the 2236 is at 43.41. Let's just go here, and let's just see where that would place us. And again, we see that we're kind of maintaining market structure here, right? We would come down from here. Let me erase that. We'd come down from here and find support right there. We're not necessarily making a lower low. Maybe we wick below here, but we're finding support, consolidating, and preparing to go up again, right? We're not breaking market structure so much so that it's likely that we're going to fall into another downtrend. So yeah, 2236 is at this level. Let's see where it falls if we pull our Fibonacci retracement tool from this A wave. And it is about that's interesting. It would maintain the 618. But, and I've seen this before and I've thought of this before, even if it maintained the 618, why is this not possible for it not to hit the 786? Okay? And I've thought of this before. I've thought of this before, and I don't think it's possible that it stopped there, even though this is the minimum extension. I think it has to go to 786. Why? Because this is 3 waves. For the 618 to be where we stop with this B wave, we would have had to have 5 waves here. Right? And this is as clearly and unambiguously a 3-wave structure as I've ever seen. So, quick example of a zigzag, a 5-wave structure, 535 is right here. Where? Here. Right here. And we got so many of them. This is one of them. 5, 3, 5. Right? Do you see this sort of middle part, this B wave hit around the 618, between the 0.5 and the 618 retracement, only because you have 5 waves in A, right? And you clearly have 5 waves in A. Another example, since we're right here, we have oodles of these kinds of examples. Actually, let's see. Yeah, right here. 5, 3, 5, right? You see a bunch of 5-3-5s. Those are zigzags. This is not a zigzag. This is clearly not a zigzag, right? This is clearly a flat. A 3-3-5. I mean, according to what I'm looking at, I just don't see a zigzag. I don't see a possible zigzag. Also, it's not, let's say this was the zigzag 5. The 3 waves have already retraced way beyond the 0.5 and 618 if you were to take this as the 5 waves. You see what I mean? It doesn't work. The only way this works is if it's a flat correction. 3, 5. That's why, even though the minimum retracement's around the 618, I've got my profits at the 786, right above the 786. Yeah. So that's it for me. we're doing what we anticipated we were going to do, but true to the market being what it is, stuff takes time, you know? You have a read, you're in a trade, it takes time. Get comfortable with waiting, get comfortable with observing, get comfortable with letting things play out. I think the more comfortable you are with waiting for trades, for your setups, for your profits to take, the better trader you become. You know, you don't try and fight the time it takes for even small time frame moves to develop, right? And this is a small time frame move. I'm on the 5-minute chart, right? This is just, it's just, you know, what the market is. There's no quick anything. But when the dump does happen and we go into wave 3, it's gonna happen like in a couple minutes maybe, right? But you have to wait 24 hours for that couple minute dump to happen. Anyway, yeah, that's it from me. Take care, everybody. Have a good night. Trade safe. And yeah, don't stay up and stuff. Remember, don't listen to the devil that says, "Hey, if you don't take the trade now, by the time you wake up, it's gonna be gone." Don't listen to that asshole. It never happens, right? Because price takes a while. It always takes its time, right? Let's say we come down. Last thing I'll say, we do come down, and we put this low in. Okay, what's going to happen? What's the first thing that's going to happen? Well, we're going to bounce. We're going to put in our mini ABC, right? We're going to bounce A wave, a composed B wave, right? And then we're going to put in a leading diagonal. I'm almost positive we're going to put in a leading diagonal. But whatever, we're going to start putting 5 waves up, okay? And only after that, we're going to put 3 waves down. How long do you think this is going to take? By the time you wake up, it still may not even be finished, right? And you don't want to enter this. Maybe you're kind of kamikaze trader. You're not like, huge on risk management. You enter wherever. Okay, fine, whatever. But then again, even if you do, this entry is probably going to be lower than any of your kamikaze entries intra-wave. So, I mean, like, go to sleep. Enjoy your time. The market's always going to be there. That's one thing I think that people always say, but you don't really believe, right? Because you're like, no, it's not going to be there. I got to look at it every 2 seconds. Like, you can look at it all you want. It doesn't matter. It doesn't mean you have to act on every single last move that you see. You have to, I think, when you get to a point where your trading becomes pro level, there's only a small window that you can act on. There's small windows that you can actually press the trade button, and it's a good risk to reward. You're managing risk properly. If you're taking trades pretty much any time you feel like it, there's something up with your system. You don't have a good system, or it's not a well-developed system. Let's be honest, right? You're exposing yourself to quite a bit of risk, and it's more probable that you're not very consistent because your system's not consistent. When do you get in? Well, sometimes you get in there, sometimes you get in here. You see what I mean? So develop that system, and then sleep at night, play with your kids or play with your video games or whatever you do, go to school, cook your food, eat, don't worry. And you're going to make more money than you ever thought you would by doing the opposite. All right. Yeah, I do dream of charts. I'm sure I do. I don't even remember half my dreams. But anyway, take care, everyone. Bye.